Now, guys, that's how you usually do. So when you analyze the stock, so you have to make certain decision based on your personal investment strategy. Okay, what do you do? All right. So if you have some doubts, I recommend definitely to walk away from it. If you have doubts and you don't know what exactly to do with this company, it's better like not to touch it. All right. So because remember, there are much more companies there which can give you better understanding. Like we analyze them, you look at our like YouTube channel, and some of them much more stable and no risks at all there. Right. So I remember when we analyzed Yandex. And for me, Yandex is very easy to understand because I understand the Russian market and I understand how Yandex operates there. I understand the revenue model. I understand the exchange rate between rubles and United States dollars. But a lot of my friends who live here, they never ever like have a chance even to see Yandex, how they operate, what they do, and of course for them it's kind of more like they're fearful to put money in there, especially when the sanctions were introduced against Russia and the price of Yandex started dropping down. They didn't understand what happened within that business. They thought, okay, maybe generally the whole economy is suffering. The Yandex is also going underwater, but in reality, at that time, Yandex was booming. It was making more money than ever because they actually cleared the market for them. Now, that's why if you understand the business in a certain way better than other people, remember, you always have an advantage because you know that business better than, and you make decision which is more precise than others people. So that's why I always recommend analyze companies before you put them, read more about these companies. And if you found the one specific company and you like it, but you kind of still not sure about it, it's better just to miss at the moment this opportunity and to invest a bit later, right? So remember, it's not a rush game, so you have to put money instantly, right? So you can wait until tomorrow or the day after tomorrow, and then you allocate your capital when you know about money. And remember, the price, if it's run away from you, no point to chase it. So wait until it comes back. So usually the price, as you can see, it goes up and down. So if you missed one wave, believe me, another wave will come. It's like a surfer, right? So when you go and surf, if you missed one wave, you can always wait the second one. All right, so what personally I would do with this company? First of all, you're exactly right. So personally, I believe I'm not going to short it because it's really undervalued, this company, and it has a lot of potential to go up. Yes, it has a lot of competitors, but remember, it always had a lot of competitors. A lot of businesses like that. If you think about all this volatility, it happens because some other competitors, they come and usually they fear investors. Investors start to sell off, the price drops down, but after that the company do something and it moves up again. So personally, what I'm going to do is to buy it, like, I mean, to entry level around 14.50 and 15. That's if you long-term buy and hold it until 43. Now, why $43? I explain you, because the PE ratio, like average PE ratio for this specific business was about $21 something, 21.6, I think, right? So, and current earnings per share is $1.9. So I just took 10 cents increase. So I perceive that within 2-3 years, the company can go and make $2 instead of $1.9, even if they do this buyback. So if they have a general earnings per company, same level as they do have now, but because they buy back shares and around 7%, so the profitability is going to increase to around $2. $2 multiplied by 21 point whatever 6, it gives you about $43 or above, right? It can go. So yes, you might need to wait for that. Maybe next year, maybe 2 years, maybe 3 years, but it can give you up to 200% profit. Again, so it happens when the media changes its opinion about this business. When we see that Joe Biden is not going to prosecute Chinese companies, kind of they forget about this promise, then we'll see that the company actually can coexist with Tencent or TikTok or any other social media. They can like work together and they have their different market share. And then when people are positive, the price usually moves up. And we already saw that the company is really, really volatile, at least for whatever happened for the last 6 years, right? So we can expect it's going to be in the future as well. Now, roll strategy when you make money in the shorter moves. So again, the buy level is exactly the same, and then sell it around $16. So if you look at technically, it's just buy it somewhere here and sell it when it goes to this level. So yes, it can go higher, but again, so most likely it's going to slow down here, maybe pull back down, so I can enter the position again. Now, this is if I just roll the strategy, buy and sell. And the third way is include options. So let's have a look at options yourself. Now, some of you guys, oops, wait a second. For whatever reason, option strategies moved a slide further. Now, for some of you guys, you don't know what options are. If you don't know what options are, I definitely recommend. We have a couple seminars. They're free. They're probably recorded, and they have availability in our YouTube channels. So definitely have a look at them, because I believe that additional option strategies to value investing, they definitely add you certain edge in your investment trading career. Okay, but let's have a look. So for those who understand how they work, so it's pretty easy. Now the current price is $15.70. So let's have a look. The sell covered call, so we can buy shares and sell covered call, but because we don't have shares right now, we can just sell puts. Now, if we do it for this week, so until this Friday, so we can see that we're getting 23 cents here. Okay, 23 cents, it means what we have to buy it at $15.50, and we're getting 23 cents. What's the percentage terms of that? So if the share price stays above $15.50, we don't have to buy those shares. We have to buy them only if the share price drops below. So if we keep that 23 cents, what's the profitability for the next 4 days? Like Wednesday, Thursday, Friday, 3 days. How much is that? So if you put 23 cents, you get 23 cents by investing $15.5. So it's roughly 1.5%, right? 1.5% for 3 days or 4 days, like even for 1 week. Is it a lot? I think it's kind of pretty good. But again, remember, this is a price which you're getting for this put at this particular level. So if I do this trade, I do it when the price drops down as well. Because when they lower the price, the stock price drops down, I am going to get for the same strike price much higher premium. Okay, but the reason why I'm showing it right now, just to show you how much money you can generate from selling puts. We're still going to enter this position and start selling puts when the price drops down to around $14.50. For the same strike price, you're going to get same amount of money, roughly about 1.5% on a weekly basis. Okay, now if we go for 2 weeks, like 1.5 weeks, we can get 37 cents. So it's more than 2%. And if we go for 4th of December, we're going to get 91 cents, right? And 91 cents, it's about 6%, which is pretty fantastic. Now, why is that? Why 6% for 3 weeks? Most likely, there is going to be announcement here about earnings. So that's why they're giving you so much money, because people, when you're selling put option, it means that you're insuring somebody. So somebody is afraid that they're going to announce bad thing there, a decline in their earnings, and what happens? They want to protect themselves. So they're going to give you 91 cents in order for you to secure this deal. And so if the price drops, they're going to sell it at $15.50. But if it happens like that, what would be your average price for the share? So if you have to buy at $15.50, but you got 91 cents in advance, what's the cost of your share, guys? Who can calculate it? Come on, guys, tell me somebody. I'll wait. Correct, Olga. So 1550 minus 91, it would be $14.59. Correct. So that's actually our target price. Right, so you see 1450, it's roughly where we want to buy. And if we deduct this, that would be 1459 for us. So that's the power of put options when you're selling put option. But again, don't rush it to do it now. It's much better to wait until it drops down because you collect more premium for that. Now, that's if we're selling put options. Similar premium you get if you're selling call options. Let's have a look. What if we buy call option? Instead of buying shares and putting so much money, like $15 in the trade, maybe we may just buy leave call options, right? Long one. So let's have a look how much. So how much we're going to pay for that. So I look for until April. So if we buy LEAP, we try to buy it for the longer term. So then for January 2022, and then for January 2023. So just let's have a look close to at the money price. So here, $15, we have to pay $2.98. So we need to pay $3 for that. Now, guys who've done options trading before and understand it, tell me $3. Is it like, let's have a look, $16 strike, so $2.5. Is it a lot or not a lot? It's close to 17%. It's a lot, right? Correct. It must be less than 10% for 1 year. And here's 6 months and 17%. And if we look for more than a year, like for 14 months, like if we go for even $16, so it's higher price, right? So call options, we have to pay $3.75. So it's more than 20%. So these options are extremely expensive. So definitely not touching them. At the moment, the volatility, probably it's just because of volatility in the markets, it's one thing, but secondly, because of earnings announcement coming up. So be careful with that.